right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and we have an incredible guest here who's quite popular on LinkedIn there, on social media, always entertaining his fans, dropping some heavy knowledge on underwriting LPs and underwriting deals. And I'm excited to have him on the show today, Mr. Aleksey. How are we doing today, Aleksey?
Doing well, man. Thanks again for having me.
Absolutely. Now, you have a very complicated last name, so we're not going to start there. We're going to move on to more important things that are easier to pronounce, such as, one of the things I like about what you do, Aleksey, is you have a unique model. You help limited partners kind of underwrite GPs and find GPs, and you're a people connector from what I see on social media. I, for one, signed up on your free platform you just launched that allowed me to put a deal. Actually, you put a deal out to hundreds of GPs. I recently got an email today from someone interested in investing in that. Right? It's a great opportunity there.
I think you mean LPs.
Yes, that's right. LPs. LPs.
I think you just yeah.
Yeah, get mixed up.
It's all good.
Absolutely.
No, it's all good.
And tell me about that.
Yeah, so I guess main business, as you said, is advising LPs.
Mm-hmm.
I actually, to clarify, I do not help LPs find opportunities directly. I believe you need to be like I think a registered investment advisor to do that.
Right.
But if an LP has an opportunity that they would like feedback on, or they have an existing investment that maybe they want me to evaluate, or maybe there's a capital call, they don't know how to proceed, whatever the story is, I'm certainly around to help provide like an independent opinion and educate them if it's helpful. I guess my most recent thing, as you've described, is trying to match GPs and LPs for free. That's gplpmatch.com. And the basic idea is, I don't know, like, I've been advising LPs for like a good year and a half now, every day. And LPs keep complaining about not finding GPs. GPs keep complaining about not finding LPs. And I've had enough of it. So I guess the simple solution, I mean, it's not so simple in terms of like getting the code up, but thankfully that I finished that. The idea is this, someone like yourself is buying a property or perhaps several properties. They can list, really submit their deal. My job is to simply make sure like the form contents match whatever's on your deck. I don't do any further diligence than that. And then the LPs set parameters. Like, so for example, the LPs might say, I only want to see deals in New Jersey and nowhere else. Right. I also only want to see deals where the GP has at least a 10% co-invest and nothing else. Or maybe a combination of like, some people have like 10 filters set, right? It must be a 10% co-invest and at least an 80% split. And 80 split to the LP, obviously. And I want an 8% pref, and I want this, and I want that, and it has to be New Jersey, and it has to be multifamily. You can think about like the iterations of these.
Sure.
And if a deal is submitted, matches what you want, you get an email. Like it's really that simple. The email contains all the basic information that the GP gave me, in a simple to read way. And it also contains the GP's email, so they can, click a button and say hello.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. That's great. That's really interesting. Yeah, it is a kind of wild world out there. My LinkedIn social media feed is just like everyone like, I used to be in the Army Reserves. Now I help people invest in real estate, or like, I used to sell widgets and now I'm a master real estate investor. And I have, it seems like a lot of like pop-up syndicators. There's nothing wrong with that. I mean, we all start somewhere, but they kind of pool capital together and like bring in retail investors and essentially find operators like myself that have the infrastructure in place, the management, the deals, the track record, and then kind of build a relationship with those investors and then bring them into a deal with like a real
Yep.
operating GP. And
Yes.
that's great. I mean, that's a great service because it's really, investing is relationship based, and a lot of our investors are referred to us, not so much like that, but it isn't, I don't know, just like the last couple of years, is it me or has there been an uptick in people that are just like, I'm a real estate syndicator. Now this is what I do. And here's the wire instructions, and it's like, you
Yeah,
gotta,
yeah.
be careful.
I think you're right. There's been a massive uptick. And I mean, I wrote like a whole set of like my 2025 predictions not too long ago. And one of my predictions is actually I think this trend will continue. Um, what I typically call it is like sort of like the feeder fund model.
Mhm.
There's like
Right.
different ways you could call it.
Mhm.
They're all intricate, but it's basically someone gathering LPs to
Mhm.
ultimately invest either through them or beside them
Mhm.
into the GP. As you've noted, there's different types of feeder funds and fund of funds. There's ones where they're charging for a great service and they're doing a great job and they actually know what they're doing in terms of vetting. And I would say like the LPs are getting their money's worth by getting double feed and double promoted in many cases, et cetera, et
Mhm.
cetera. And however, I would say perhaps, if I may so even say the majority, are
Mhm.
probably not worth it.
Mhm.
And in some cases, I think this is too harsh of a statement,
Mhm.
but it's not too far away from the blind leading the blind.
Mhm.
Um, to the point where, I mean, it's unfortunate this is the case, but like I have I've dealt with capital calls where an LP invested through a feeder fund. And when the LP reaches out to me, they say, "Hey, I reached out, like, I got a capital call from so and so." And I
Mhm.
look at the deal in CoStar and I'm like, they didn't buy the property. And they're
Mhm.
like, what do you mean? Like I invested with them.
Wow.
And then you look at the original deck and there was no mention of the fact that they were a feeder into someone else's deal.
Wow.
Um and then not only do I have to explain to the LP that perhaps their money is gone on paper,
Mhm.
in terms of the valuation, but then I also have to explain like like you didn't really invest with like the decision maker. Like you
Right.
invested with the guy who pulled some money together, including yours, and put it into the deal, but they have no rights,
Mhm.
right?
Mhm.
And these things get pretty intricate, and in some cases pretty uncomfortable too.
Yeah. Yeah. That's well, that's just fraud at that point. I mean, if they didn't actually buy the real estate, there's a difference between investing in a bad deal and then putting your money into something and they don't actually close on the real estate. That's completely different.
No, no,
So,
no. Sorry. Let me just be clear. I don't think it's fraud.
right,
Maybe I didn't wasn't clear about the situation, but your money went into the property that you expected to buy.
right, right.
Right? The problem was
Oh,
that you expected the person that you're giving your cash to
got it,
buy
got
it,
it. Okay, okay.
but like there was all of a sudden like a new GP
Yeah,
that you
yeah,
now realize is there, and they were the actual GP all along, and
yeah.
the guy that you invested was just an intermediary.
Right, right. And that should absolutely 100% be disclosed. Like that should be like page one of the deck, we're a feeder fund,
Yeah, yeah, yeah,
but here's
totally.
the
Like
service we offer. We underwrite the
exactly,
hundreds of
exactly.
GPs. We surf the market, we scale the market, we have the in on great operators, and we're going to bring you the best deals out there so you can, focus on what you do best and not. And that's great because I suppose, underwriting deals, finding good operators and knowing who to trust your hard-earned capital with is somewhat of a job, right? And that's why someone like you exists to help LPs with that decision-making process and to save them time. And
Right.
so
Yeah.
it is a service, but you're right, they're getting double feed, on it. But okay, that's interesting. Now, what have you seen out there? Tell me some interesting stories. That's one of them for sure, but when you're looking at a deal, right? So an LP comes to you, they say, "Hey, Aleksey, I saw this guy Aaron on social media. He's wearing his sunglasses. He's talking in front of buildings, and he looks like he has good deals. He talks a big game, but take a look at his deck here. Take a look at his model. What are you looking for when you're underwriting deals out there for LPs or trying to guide them properly?"
Sure. So I'm hearing two separate questions. The first is, what do I look for in deals and how do I get
Yeah.
feedback on them, right?
Uh-huh.
And then second is, what do I see out there, which is, I think, actually is slightly, it's related, but separate question.
Right.
So
Right.
I'll deal with the first one first.
Okay.
I wrote what I call the three pillars of LP investing. They are ordered in a very particular way, which we can, talk about if you'd like. But basically, the first pillar is execution, which is essentially a deep dive on the GP. Like, can you trust them? How's their track record? Have they done this before? For how long? How many exits have they had? And I always remind people, um, there's nothing wrong with investing in someone that has never done a deal before. You just have to know that they haven't done a deal before and execute accordingly and understand the risks accordingly, right? Like every deal is complicated and you have to weigh sort of the pros and the cons and then either move forward or pass.
Mm-hmm.
The second pillar is alignment of interest between the GP and the LP, which really has three components to it. Like not any surprise, I think, here, but I think uh, co-invest of the GP, meaning how much skin in the game do they have in the deal.
Mm-hmm.
The second one is the fees that they're charging at inception, during the investment period, and also at the exit. And then the third thing is the waterfall, which is basically the pref and the split beyond the pref.
Right.
I always remind LPs that you can't judge deals based on any one of those alone. Like I will
Right.
get calls all the time that will say, "Hey, I can't believe it. Someone is, doing a deal with a 50% split. How egregious."
Mm-hmm.
And I'm just like, I don't know if it's egregious. You didn't give me enough information,
Right.
right?
Right.
Like, did you go to the next page where it says that there's a 12% pref?
Mm-hmm.
Oh, no, I didn't.
Mm-hmm.
Okay, like, did you go to the following page where there's a 25% co-invest, which is much larger than market?
Mm-hmm.
Oh, that's funny you say I didn't.
Right.
Like, so, okay, but my point is they're all together, right?
Mm-hmm.
Um, and then the third pillar, which is the last, and oftentimes it doesn't even get to this stage, is the property itself. Like, what's the business plan? What's leverage like? How do historicals look like? The pro forma, right? Like, everything you can imagine: comps, sales comps, rent comps, all
Yeah.
types of things related to like the property itself.
Right.
But some people may be surprised that it comes third, but I think that's very intentional,
Mm-hmm.
just from my perspective. So that's just a quick rundown of what I look for. It's
Sure.
all within those three categories, and I give LPs feedback on all three. And
Yeah.
then what do I see? I mean, Aaron, like I guess the question is how much time do you have? um, I think if I were to distill the feedback that I have into a sentence or two from all the things that I've seen is I think GPs, honest GPs, assume everyone is honest, and that's not
Mm-hmm.
true, right?
Sure.
Meaning they assume, like, sometimes I'll post something on social media and GPs get upset at me because they're like, "Oh, like how could you speak so poorly about our industry?" And it's like, well, I can because perhaps not everyone is like you,
Yeah.
right? And LPs need to understand that not everyone is like you, right?
Mm-hmm. Mm-hmm.
Um, the second thing is, I think for LPs they need to understand that. I mean, I'm not exactly sure how else to say this, but the world of syndications is kind of the Wild West, right?
I could
Like,
agree. Yeah.
um, and I just got I got a phrase that I kind of like. I might use it in an article.
Yeah.
I'll send you royalties.
Yeah, there you go.
um,
Now we're talking. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate.
Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com.
If you don't have time to understand what you're investing in, get out of the kitchen. You know, like you just don't do it. Like no one is forcing you to invest in anything. You can invest in S&P. You can invest in REITs, by the way, right? Like if
Right.
you want real estate exposure, public REITs are an option, right?
Right.
If you want specific asset level or portfolio level risk, like that takes a decent amount of knowledge.
Yeah.
And if you don't have time to like diligence it and understand it, that's okay. I would just say don't touch it then.
Right. Right. Exactly. Yeah, yeah, I hear you. I hear you. If you don't understand what you're investing in, yeah, don't do it. And that's our job as GPs to kind of take something that can be complicated, preferred rates of return, IRRs, waterfalls, equity splits, fees, and then that's just on the structure level. Then talking about the deal itself, rental comps, markets, cap rates, right, yield on cost, so on, management strategy, right? So many details there. Our job as GPs is to sum it up and give as much information as the LP would like, but also make sure they know what they need to know. I never let someone invest and without, even if they don't ask the question, I answer it for them. Here's what your investment experience is going to be like. Just because I said 19% IRR doesn't mean you're going to get 19%, $19,000 in your $100,000 investment in year one. That's not how we're, explain exactly what it means, an IRR based on, cash on cash, right? So that you get no unhappy campers and everyone knows exactly this is a long-term investment. You can't call me up 18 months from now and say your car broke and you need the money back. It's not just sitting there in an account. It's a process. It's a long-term investment. So I don't say it like that. That's kind of mean, but but some people need to hear that, like kind of like that, and just explain it because, and you also got to know your investor too, right? Obviously you have to make sure they're accredited, right, if it's a 506C, but I've done Bs too, right? I've had 506Bs which are even a little more complicated, and there's a lot of gray zones there, so for the most part we really try to follow the rules, and but as someone being a sophisticated investor, there are times, I just had someone invest in our debt fund, and he just found us on the internet, and it's pretty rare actually. We really, reel in investors just from the internet, usually, I mean, we do, obviously, you get leads on social media and SEO and things like that. We don't really run many paid ads, but when we do, those conversations are sometimes arguably even more important, that I really make sure they understand everything. And I really need to penetrate their cash situation. And it can be uncomfortable for them, but I have to know these things. If your car breaks and you have a $12,000 repair, will you need this money back? And I had someone call me up 6 months into an investment and say they need the money back after signing a 3-year note on our debt fund. And I sent them the money back 3 days later. It was fine, but it was, kind of like, thank God they weren't in an equity deal where that money's invested in the down payment of the deal, and it's at work. So, and so it is complicated. Investors have to understand that it's an illiquid investment. The difference between cash on cash and internal rate of return. And there still are, from time to time, when you get enough investors, they'll conveniently forget what you told, even though the PPM, the pitch deck, everything reiterates it in clear black and white. Here's the structure. Here's the payout. What I do is I make a simple Excel sheet and I blow it up and I make it all pretty. I put our logo on it and I say year one, 2% cash flow. So I do $100,000 example investment. So year one, $2,000. Year two, $4,000. Year three, $6,000. Year four, refinance, $80,000. And so I show them exactly what they're going to get each year on their example $100,000 investment. So and I send them the pitch deck, which is a 50-page deck. and I send them a one-page summary, which has like IRR and cash and share classes. And then I send them the third thing, which is just a one-page JPEG of that blown up as big as you can make it, so that they know exactly what to expect, the investment experience on this investment. So there's no denying that they don't understand that, hey, this is how the return on investment is going to be penciled out, and your likely experience, and of course that has disclosures on it, like these are targets and and market assumptions and so on, and past performances and guarantee future. But even so, that's what I like to do, right? Because you send someone a 50-page deck, I know for a fact a lot of my investors that are investing 3, 4, 5 times in our deals, and we already have a relationship. They know us and they trust us, and they know we do business with integrity. They're not going through my 50-page deck. They're going to have a 30-minute conversation with me. I'm going to talk about the deal, why I like it. We're going to talk about their kids and my kids, and the ski vacation coming up, and then they're going to be like, all right, I have an investment coming back. I'll put 50 or 100 in this one. And it's a relationship business. And that's one of the things I love about it. I mean, I know my investors personally, and they know me personally. But that, and still for them, I will send them the JPEG, the simple JPEG breakout, because I want to make sure every single investment they understand. But especially the new ones that I'm talking to on social media or internet that come across, man, you've got to really make sure they understand exactly how the investment works.
Yeah, totally.
Yeah. So anyway, that's one of my tips of the trade. All right, Aleksey. So finally, one last thing I want to ask you before we wrap up here is, you have an excellent social media presence, and that is certainly a race we all seem to be racing. Any small business owner like myself, we're always trying to get traction on social media, and you seem to have great traction. I enjoy following you on social media. You have a lot of engagement on your posts. What are some tips you can give us schmoes on how to improve our social media presence?
I think the first question is whether it's worth it.
Yes.
Yeah, maybe we'll start there. I think
Mm-hmm.
most people assume that it is, but I don't think it's so obvious. Um, what most people get told by, like, excuse my French, but social media people that have no idea what they're doing, but they will charge you to help you,
Mm-hmm.
is, like, you just need to be active. You just need to post,
Mm-hmm.
right? And they'll charge you whatever it is per month, and they'll put out like Chat GPT logos and like cute little posts that they Chat GPT made, and they charge you for it. Of
Mm-hmm.
course, you'll wake up a year later with, like, 50 followers,
Mm-hmm.
and 50 of them will be bots, right?
Mm-hmm.
And so my point is, the only way to grow a social following is to be engaged, which means, like, you're posting genuine content. People can tell that you're, like, you thought about it, and like it's unique to you, whatever your perspective is, right? um and when people ask you questions, you have to make time to respond, otherwise they won't come back, right? Like,
Mm-hmm.
you're really just building a community. I think that's true about LinkedIn and Twitter. I don't spend so much time anywhere else.
Mm-hmm.
So that's number one. As you can tell in my summary, I suppose, it takes a long time. It takes a long time to generate decent content that's actually interesting. Post about it in, like, I guess, reader friendly way, and also engage in the comments with all the people that may have questions, but they may have nothing to buy from you, right? They're just wondering what something means or whatever it is, right?
Mm-hmm.
So that's my biggest feedback, is, like, make sure that it's actually worth it for you. Assuming you decide that it is, I think there's really only two variables to be successful: provide value to others and be consistent.
All right.
Um, if you do that over a long period of time, you'll be rewarded. Now, again, just to be clear, the question is like, can you spend an hour or two per day on social media to do this? And in the end, will it be worthwhile?
Mm-hmm.
Not, it's not so clear. In fact, I'll tell you, just parenthetically, I probably spent probably an hour to two, maybe three, on average for a year before I announced my LP advisory business, and I had no idea why I was building a network. Like, I didn't, like, have anything to sell. I didn't realize that I was going to start a business at the time. Um, And then eventually I announced it, and most of my customers have come from either Twitter or LinkedIn. But you know, it took many, many hours to get to that following and then growing it from there on out.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com.
You're right. You're absolutely right. And, one of the things I've come to recognize is there's lots of ways to raise capital and build your brand. And depending on what you're doing, like in my space, I've made a conscious effort to go out and meet family offices at family office events and meet broker dealers and RIAs at broker dealer and RIA events and really understand that world a lot better. And what I've come to realize is it's kind of a crowded space on LinkedIn or social media, Facebook, Instagram. You have to have a presence. Like I certainly have a presence. I post probably 4 times a week. I try to have creative content, but I'm also guilty of just like, I got to get something up today. And, I'm running a business. I'm very busy actually buying real estate and managing real estate, and managing employees and investors and making sure that, we're getting the right reports out to them and so on, and hitting our targets and our KPIs. So like, I don't have a whole lot of time to like sit around and make social media content, like quality social media content. I probably, spend 30 minutes a day on my social media presence, 4 days a week, I'd say. But what I really focus on is meeting family offices, meeting RIAs,
right,
meeting other co-GPs that have access to super high net, ultra high net worth individuals, and that's kind of where it's at. I'm working with a broker dealer right now that's getting us in front of BlackRock and Travelers Insurance and so on. I just got off the phone with a co-GP that has a ultra high net worth individual in Connecticut that, can write one check to cover our $22 million raise we're about to embark on, and that's really I'm kind of going quality over quantity these days. And LinkedIn's great. I have a presence there. I don't know if I've really ever just like met someone on LinkedIn and then they've ended up investing necessarily, maybe like once, but more so it's more like a compliment. It's like I'll meet them at an event or they'll be referred from an investor, or maybe they'll see it'll just be like, oh, Aaron has a social media presence that makes me more confident in him and my willingness to invest in what he has going on, and so it's hard to say if it's really a great lead magnet, more of like a lead compliment, but no, that's great feedback on your end, and there's many different ways to raise capital. I think as we've been around 11 years, we have the infrastructure in place, we have the track record, we've done 300 transactions, we've done about 12 syndications. So now we're at the point where I just feel like LinkedIn is like a crowded space, but when you start to get into higher level investment spaces, it's less crowded. And that's kind of what I'm focusing on.
Yeah, makes sense. Oh, it's funny that you say LinkedIn is crowded. Sorry. I would actually say the opposite in case it's helpful to you. I think I've focused a lot of time on LinkedIn recently because I've realized that LinkedIn on like a per minute basis in terms of like you investing time into it is actually probably like somewhere between 5 to 10 times more effective than Twitter right now. In terms, and that might be specific to maybe my niche. I'm not sure. But I'm growing much faster on LinkedIn than I am on Twitter. I think part of that is just, like on Twitter, there's a bunch of like anonymous accounts. They can post whatever they want, right? Whereas LinkedIn, people are like scared of like their public persona. They don't really want to post in front of their boss about their new idea, whatever it is. And so as a result, LinkedIn just doesn't have a lot of posts to show people, right? And like they don't want the feed to be sort of a bunch of ads, right? So I think those who post, for the next like year or two consistently and it's valuable, will
Mhm.
actually be pretty rewarded
Yeah.
as far as LinkedIn goes.
Yeah, I get by far the most traction on LinkedIn. And for what I offer, which is, our minimum investment is $30,000 for our debt fund, is $50,000 for our equity deals. They're for accredited investors only. I mean, I feel like I'm not gonna be on like TikTok, like I need to be on a more professional platform, and so I get a lot more traction on LinkedIn than I do on Facebook or Instagram.
Yeah.
I do have a presence on Facebook. My company has a Facebook and Instagram presence, but that's not really where we get the most traction. It's really more so just for our investors to see us out there, and then maybe a few new ones coming here and there. But all right, very good, Aleksey. Great to connect here. Your wealth of information, and how can people get more in touch with you and learn more about what you're doing there?
Yeah. I guess if you want to sign up for GPLP match to like either submit deals or sign up to receive them, that's gplpmatch.com. Otherwise, I mean, you can Google my name. It's pretty unique. I post pretty consistently on LinkedIn and Twitter. I write to 7,000 investors on something called Limited Partner Investing Lessons. That's lplessons.co. And yeah, just say hi. I'm pretty approachable. I usually respond within an
Okay.
hour or something.
Great. Great. And we'll put those links in the show notes as well for our listeners. So yeah, definitely connect with Aleksey here. He's a great guy to follow on LinkedIn. Very entertaining character and wealth of information. And if you're thinking about plunking your hard-earned money into a real estate syndication, he's a great guy to talk to. He can underwrite it. He can, well, not underwrite, but give you great idea of if, how it compares to what's out there. I think you have a great understanding of the space. So definitely connect with Aleksey. So thank you so much, my friend, for coming on the show here. And by the way, my friends, if you're enjoying our content here on the Passive Cash Flow podcast, we've been around 4 or 5 years now. We're up to over 170 episodes. Share this with a friend or like it as well. If you're on our YouTube, you can subscribe to our page also, or you can subscribe to us on Spotify or iTunes, all the major platforms there. But share this with someone you think would gain value. If you know another LP investor that needs help taking a look at opportunities, seeing if it's a good deal to invest in, share this episode or other episodes we have on with different RIAs and tax professionals and legal professionals and so on. And we encourage any questions as well to engage with us there. But please, if you enjoy the content, we encourage you to like and subscribe and share with your friends. Thanks a lot. Have a great day.